Hey everybody, Economic Ninja here. I got a great subscriber question. It's about real estate, it's about debt, it's about taking out loans. So without further ado, let's do this. All right, everybody, here's the question from a great subscriber. Should I'm paraphrasing because I just made some notes on cardboard. What do you think, Ninja, about refinancing my house in order to pay off credit card debt? Should I do that or shouldn't I? All right, first off, I want you to understand something. This is a very tricky question. I'm not a financial advisor. I don't know anything about money. Don't pay attention to me. I drive a Kia. Just joke. I love my Kia. I'm just a dude with a brohawk and a dream. It's bright. So here's the thing. I'm really big about discipline, organization, discipline and organization when it comes to finances, personal finances. I think if you're not disciplined or organized, you're gonna fail, all right? Now, a lot of that is, the types of debts, there's a way of using longer term debt that has better interest rate to pay off shorter term debt, which has a higher interest rate. It's a great tool to use to be able to, get out of debt and get out of problems quick, right? Here's the problem though. A lot of times I've seen people try and do that and they fail because after a few months or maybe a year, they go right back into these debts like credit card debt, a new car loan, things like that. Because they're like, hey, I can afford it. And it's almost like they forgot about the pain of trying to make those monthly credit card debt payments. With that said, if you're the type of person that says, no, I'm rock solid, I can do this, I can pull an equity line against my house or, get a refinance on my home to pay off that stuff. And then what I will do is I will take the payments that I was normally paying. Let's say I was paying $500 a month in credit card debt or a car payment. And I take that $500 and I just keep stacking it and stacking it and stacking it on my mortgage until I know that I have paid at least the amount, like let's say you had $20,000 in debt or $30,000 in debt, let's say. And you say, I'm gonna keep that $500 payment, I'm gonna stack it on top of my mortgage until I have paid off that $30,000 plus down on equity on the loan, that I've paid it off. In my mind, I've done it, but it was a lot easier for me to do it because now I don't have these, huge interest rate loans that are, it's a trap, it's a debt trap. If you could do that, I think it's awesome. It's a great tool. If you can't honestly look yourself in the mirror and say, I will not get back into this debt cycle, don't do it. Use that debt as motivation going, man, if I don't pay more than those minimum payments, it's killing me right now in interest and in fees, all right? But that's something you have to really ask yourself. I know so many people that have bought a home and then only, 20 years later, they owe more on the home 20 years later than they did when they bought it because they're using it as a bank account. Now, savvy individuals, I've done it before too. Investors use real estate as a bank account because it's interest-free. It's tax-free loans, right? That's a whole nother subject. So it's a emotional question. You have to look yourself in the mirror. If you can do it, you could use it as an amazing tool to pay off debt, but you have to be very honest with yourself. I hope you guys got something out of this. The Economic Ninja is out.